Hey, it's Jason Coleman, your favorite celebrity loan officer, and today we're talking about conservatorship, and we are talking about Fannie and Freddie being owned by the government. So back in 2008, Fannie and Freddie were not owned by the government. In fact, the government came in and didn't really bail them out. They pretty much took them over. And instead of bailing them out, they just decided to put in their own rules and regulations and take the profits all straight from Fannie and Freddie. And the government, our lovely government, has been cashing in through the last few administrations on Fannie and Freddie. And what Fannie and Freddie are they are the companies that we do our conventional loans with. So here on HousingWire.com says Trump's blueprint for Fannie Mae and Freddie Mac reform expected within days. This was September 5th. It's just about a month ago. So what's going to happen here is, I don't know, within 6 months, within 12 months, we're not sure when it's going to take effect, but the government is going to cash out on Fannie and Freddie and make it more competitive and send them into the private sector. So the government had upped the debt-to-income ratio limits for purchasing and cashing out up to 50%, from 45 to 50%. Now, Fannie and Freddie, their thing was 43%. So what does this mean to you? Are you a homeowner? Are you a real estate agent? Well, let me tell you what it means to you. Over 50% of the transactions we've been doing in the conventional financing world with purchases or refinancing have been over 45% debt to income ratio, over 50% of these transactions. So when the government does decide to set them free and make them a private owned company, that means the debt to income ratio is going to go down at least 5%, maybe 7%. And that's going to affect our housing in some form or fashion. So you have to be prepared. If you're a homeowner and you're thinking about cashing out, doing any type of refinance, now might be the time, especially if your debt to income ratio is high. If you're a realtor, you got to keep this in mind. You have to educate your friends and family and your warm circle that this is coming down the pipe. This is for real. You can get on Housing Wire and read all about it. It's a real thing. And the debt to income ratio, if half of our transactions are over 45%, what's that going to do to the housing? I don't know. Where are the people going to go that have the high debt to income ratios? Well, they're probably going to have to go to what we call alt loans, like different types. They're going to be higher interest rates. They're not going to qualify for the Fannie and Freddie. They're going to have to find alternate solutions in the private sector. So I just want to throw that out there. If you haven't looked up conservatorship and the Trump administration setting Fannie and Freddie free, you need to educate on that. And if you haven't looked into Arizona's sandbox bill, where it allows these iBuyers to come in and not get licensed like the rest of us have to do and experiment on Arizonans, I would think twice about dealing with these companies. If they're not licensed, it says that they have to follow the rules, that they're going to have to follow compliance. But if they have to follow compliance, why don't they have to get licensed like the rest of us? Anyway, that's enough for my rant today. Be on the lookout, 6 months, 12 months, I don't know. But it hasn't changed yet. Until it does, let's keep moving forward. Thanks for watching. Thanks for listening. Until next time.